All right, good afternoon, everybody. How are we all doing? Trying to scroll all the way up here in the VTF and see exactly what that PPI number was again this morning as we start the meeting. I think I know what it was. I just don't want to misquote it. 8:30. Got to get to 8:30. 8:48. Here we are. All right. Oh, thanks for the repost. All right, let's get started. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and a member of FINRA SIPC. All my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I got out of Google today. Everything else is the same. But I probably should lighten up a little bit more. All right. So yeah, really strong day for the market today, despite a hot PPI print this morning. The S&P closed up a percentage point basically. The Q is up 0.9%, roughly the same. The IWM with some relative strength, which mostly came from the gap, I think, and a little less from the intraday. If anything, the Qs might have caught up a little bit intraday. The IWM closed up 1.5%. So really strong market, and that is despite a hot PPI this morning. So the core PPI was in line. The month over month, I think, was 0.7% versus 0.4% expected, and the year over year, I already forgot. I just looked it up. Was it? I forget. 1 point something. It was hot. It came in hot. So I was concerned. Naturally, I was concerned. What did the market do though? Thanks, Pat. The year over year was 1.6% with an estimate of 1.2%. Yeah, so hot there. Core was in line, and core is obviously pretty important, and that came in line. But yeah, PPI was hot. Market barely blinked. That was 8:30 this morning. We had a real quick little downtick. We recaptured our starting point by 8:50, and for the most part, we never looked back. There was a quick downtick when the market opened that got back below that neutral level, but it was very short-lived. And then we had a pretty explosive day here on Wall Street. We kind of broke out. So what I had mentioned in the morning meeting today is that we were testing the consolidation resistance. So highs from the 11th is what I would kind of call this tighter consolidation of this wedge. The resistance from that high is 448.77. And the more major pivots that I'm paying attention to are still the September 7th low and the September 1st high. We haven't broken those levels, but you got to say it. This is a positive day for bulls. We broke out of the real tight consolidation from the last few days. SPYs recaptured 450. The Qs had a pretty strong day as well. I think we managed to close just above this 185.50 that I was looking. Sorry, 377.50 that I was looking at, which is the high of the 11th. So that's the high of the most recent consolidation. Same thing, big picture though. The low from September 7th, the high from September 1st, are something I'm really paying attention to. But the Qs are beginning to break out of this tighter wedge to the upside. The SPYs are beginning to break out of that tighter wedge to the upside. And the IWM showed relative strength. It was a very concerning close yesterday in this IWM. Closing right at or even a couple ticks below the 200-day for the first time. Just to give a fantastic snapback with relative strength, breaking the previous day's high, getting above the September 11th high of 185.72, closing above 185. I keep talking about that 185. We had 3 different trading sessions where we would get above 185 and not actually be able to stay above it. And I even had that concern once again at one point this morning. phenomenal opening drive here in the IWM, but the market's very extended with that opening gap, so you need to have some sort of price and time correction. We pulled back to the 80 MA. This is where I was looking for the market to pivot at pretty much 9:55, 10 a.m. I began to get that pivot and immediately failed. And honestly, when it immediately failed and we were losing 185 for a second time and making a little bit of a lower high and were unable to hold in, I kind of thought that the day was shot for bulls. So I was wrong. And I spoke about that a little bit during the day today, where I feel like recently I've been a little bit off on, it's definitely not a science. It's more of an art. No one's right with it all the time. I feel like I've been a little bit off with my expected pivot points, and we keep kind of overshooting and undershooting where I would normally expect, based on my understanding and my study of price action, where I would normally expect us to pivot. It seems like we keep overshooting and undershooting that. It was the same thing yesterday, and yesterday was obviously CPI day, with this big overshoot to the downside. I remember originally thinking that we were going to pivot at 950, calling out for some potential longs there, and we just rested for 5 minutes, and then the pivot was actually deeper. And it was the same thing on the upside. On the upside, I was like, all right, if bears are going to make a stand, we shouldn't really be able to get above 183.85 or so, and we overshot that to the upside. We overshot to the downside, we overshot to the upside, and then that pivot came in, a pivot high came in that I was kind of expecting. And it was like similar but different. I thought that pivot would come in here a little bit before 10 o'clock because the 80 MA on the 5 minute caught up. We attempted to pivot. It immediately failed. When I saw it fail, I was like, oh, that's really bad news. But it just turned into a 15-minute correction, which is not the end of the world, as we know, especially for this time of day at 10:15. And then we actually had a really strong pivot up that almost brought us to new highs for the SPYs. It did bring us to new highs for the Qs. That's why I was just saying before, the IWM is relatively strong on a percentage basis, but I actually think that the Qs are strongest as far as intraday price action. You can see the Qs at one point filled their gap and ticked negative. And this is another one, by the way. I called for longs in the Qs at 955. And some of those names maybe held their 955 low, but most of them, like the Qs, ticked through that low by a little bit, overshot my pivot by a little bit, concerned me, and then just had this kind of insane rip. So I think that the execution of some of these pivot points, even if the thought process has been correct, the execution has been, like, at least for me, a little bit off on some of those pivots. We seem to keep overshooting and undershooting. And then same deal, this move on the upside, for this time of day, I mean, it's just massive. And that's what I was talking about. This low here is just under 374. And we just ripped straight from 374 to 377, almost 378. On no new news, no new nothing, just vertically, straight up, barely a red 5 minute bar. And then we kind of go into our pattern of higher highs and higher lows. And this is something that broadly I think I've been hearing a lot of traders talk about, especially traders who prefer to focus more on the counter trend stuff. It's like, hey, when I find these pivots, usually I'm able to work my way out of them, but these moves have been so directional in nature on the intraday that if you're shortened too early in this up move, eventually you do get a pivot, but it's just very difficult. So the trend is definitely your friend, and we want to stick with that. But yeah, I feel like we keep kind of overshooting and undershooting my expectations on an intraday basis, so I got to try to figure out if I can adjust to that new normal, if that's going to stay that way or not. But overall, big picture, again, a lot of progress. SPYs breaking their wedge to the upside, closing above 450. Qs sort of beginning to break their wedge to the upside with a close above 377.50, which is solid. And the IWM with a great comeback off of yesterday's weakness to close above 185. That's all really bullish technically. Tomorrow is a really big options expiration, and the historical data that we've seen is that tomorrow tends to be a little bit more of a bearish day, and the historical data that we've seen is that we know, and we've seen this a lot just in general with these big options expiration days, that it can kind of lead to an unquenching of some volatility in the market or larger movements that can happen in the market. So we'll see if that's the case next week. I'm a little bit nervous about it, and we know that the back half of September, specifically after this options expiration, tends to be very seasonably weak. I think Pat in the morning note yesterday provided the data that we were down 28 out of 33 September's post options expiration, with the median amount being 1%. So we'll see if that happens or not. And I still the technicals tell me not to be too worried right now, especially with the market. The IWM playing catch up the way that it did today, which is fantastic. The trend is intact. Looking at the SPYs right now, the small time frame bull trend's intact. The big time frame bull trend's intact. The intermediate, I would say, is still neutral. It's the same thing with the Qs. So these market technicals are looking good. But I'm just kind of still a little bit nervous on this options expiration, loosening this market up, increasing volatility, and I just think that with the way these market dynamics are right now, that an increase in volatility could actually lead to really sharp down moves. So if we were to sell off in the back half of the month, which is definitely an if, because right now the technicals are saying that's a no, but we'll monitor that to see if it changes. If there is a sell-off, it could be a really fast one. So for the moment, I'm going to stick with what I've kind of said for the last month, which is low probability of a down move, but if that down move happens, it could be really fast, and I don't want to be caught unprepared for that. So I'm trying to manage my long positions right now, which really should dictate that I shouldn't be putting on any new long swings, which I kind of have with this Chewy, and it's against me a little bit more today than it was yesterday, so I need to continue to manage that. But I don't think I want to put any real new long exposure on immediately right now. I've got plenty of long exposure. On. So I want to limit any new long exposure and manage the risk on what I currently have. So probably no new positions for me tomorrow or next week, and at least not on the long side. If I see a short setup, that would actually be helpful. Just to be a little bit defensive. And if the technicals are right and this market moves higher, then I'm well positioned for it. And I also can't help but keep thinking in the back of my brain that I feel like a lot of people are also nervous about the second half of September. I feel like it's been very widely spoken about. So what if we actually were to rip to the upside, which is something that no one is really talking about or expecting. So we'll obviously see how it plays out. It's all conjecture at this point. Options expirations tomorrow. I don't like options expiration days. They tend to have really wacky price action. So we'll see how we trade tomorrow, and then we'll see if that does lead to a little bit of unclenching of how tight this market's become as we go into next week. And again, just it's so impressive how the market is ignoring the move in the dollar, ignoring the hot PPI. I know TLT has stabilized a little bit, but for the most part, ignoring the increase in interest rates. And you wonder, I just think that we have seen historically, and this is what I was chatting a little bit about into the close, that sometimes that bad news kind of builds up and the market holds in, and you need a market dynamic catalyst like an options expiration to actually allow the market to move in the way that it, air quotes, should, based on what we're seeing from the dollar and from interest rates and everything else. So we'll see if that happens or not. I'm certainly concerned, but as far as I'm concerned, I am 100% long, and I am happy to be 100% long because I had great trade setups that got me into these positions for the most part, and the technicals are bullish. So if that situation I'm talking about, if my nervous realizations were to come true, the market will tell us, and we can adjust, we can manage risk, we can flip, we can do what we need to do at that time. So it's kind of big picture. As far as the small picture goes, RMIPO, I don't know. I don't really have too much to say about it. I traded it off the open. I made a couple dollars in it. I did not trade it aggressively. made an okay P&L in it, actually, considering how unaggressively I traded it. But the move higher was great. I think my price was like $56 or something like that. When this thing first opened up, I caught the whole initial move, and I had a feeler that I was kind of just trailing. I got stopped out of that when it broke below 59, which was trying to establish as some support. So I missed this big movement in the close. But yeah, our ARM IPO was not a disappointment. I feel like they kind of satisfied everybody here on this thing. They opened it up at a really appropriate price. So people who are playing that syndicate game were able to make a few dollars, but they also left some money for the little guys to be able to come in and make a few money and a few dollars and trade this thing at an appropriate price. There's just been so many IPOs that I've seen over the course of the last few years where they open it up for trading on the secondary market at such a huge premium to the IPO listing price that it made it impossible to be involved. And then the thing that drives me most crazy is that there'll be times where you see the IPO, just making up some random numbers, is priced at $50. They open it at 90 and it trades straight down all day to 75, and CNBC will be talking about what an amazing success the IPO was to be a $50 IPO that closed at 75. When if you're any normal trader or anybody who doesn't get syndicate flow, that you would have gotten smoked at any point throughout the day in buying it. This was not that situation. Priced at 51. They opened it at what price did they open it at? Like 56 or so. Opening price looks like 56.10. So reasonable. $5 premium to the IPO price. Enough for this thing to be able to run based on the demand that was out there and give a little bit of a move higher. But at the same time, not so poorly priced where, like, another bad situation, which is a bad situation for the company, is they IPO prices at 51 and it closes at $90 on the first trading day. That's great for us. Sometimes, if it opens up at 56 and runs to 90, we've seen that on IPOs as well. But it means that the investment bankers could have done a better job raising capital for the company, which is a large point of the whole reason to IPO to begin with. So yeah, IPO was fine if anyone was involved in it. There was big sellers there at 56 and then 56.20 at first. That seller was so big at 56 and then fixed 56.20, lifted to 56, was right there at 56.20. I kind of didn't think this thing was going to work, but I already had my risk on, and buy the ticket, take the ride. So I was like, all right, I already got my risk on. I'll see what this thing can do. And they were eventually able to clear out those sellers, and the stock was able to give the run that it actually gave. But when I saw that how heavy they were selling that thing at 56 and 56.20 and 57, I was like, I just don't know if there's going to be enough demand to clear out these sellers, and could be not good. But it was fine. So yes, that was ARM. I didn't. What else was on the watch list for today? Tesla. I didn't trade it, but Tesla looks like it was pretty decent. Gave some follow through to the upside. We talked about possibly not waiting for the inside day high to take the long. There was some news out in Tesla this morning. The chart pattern's pretty bullish, but it's a bit extended on a daily. So I'm not sure if anybody focused on this or not, but the second inside 5 and up was okay. Worked out okay. Rig was fine, gapped up a little bit big. If you were long off the opening low, you never got stopped out, but it didn't exactly give you a big move there either. Prudential, I never even really looked at any of these after they opened. Prudential, we talked about going long versus yesterday's low. So I'm not sure if yesterday's high. Inside day, bullish chart, got upgraded. Another one that I didn't take, I'm not sure if anyone did, but it worked okay. And then the struggle here is still this Chewy. Like Cody said, Cody Mr. Positive all of a sudden today. I love it. At least it didn't close on lows for once. So they closed on lows for 4 trading sessions in a row. This descending channel, I don't think the rate of descent in this thing can possibly continue for too much longer. I think that this thing needs to either begin to go sideways is the most bearish situation, or actually give a real pop at some point. But I can't get that RDR. And even today, I didn't get the RDR. I couldn't get this thing back below 2150. And I bought it. Unlike yesterday, where I feel like I you know, I was heavy, but I managed the position really well. I added in the appropriate spots. I took off in the appropriate spots. Today I was a little bit too aggressive too early. I took one really big ad around 2150 or so, and then that kind of left me playing defense on the way down here, and you know, wasn't great. Having stock from yesterday, holding a position against me, which I already typically don't do. It's kind of already a little bit of a violation of the rules. And then the heavier ad was the first one I did was bad execution, and then you know, I was able to add a little bit more around like 2111. I think I got some stock, maybe a little bit of 2106, and then caught this kind of pop. And I saw this 50,000 share bid come in, and the way they upticked this, it just looked like maybe it finally changed, maybe it finally bottomed. And this was a great initial move, but still not the right follow through. This was a great initial move back to almost 2150, and we really could have used a quick break like it did, and then a new high that breaks that 2150 RDRs and then goes into some sort of upside grind a little bit based on this daily chart extension. There's a lot of room here on this daily chart for this thing to go, but it just can't seem to clear up for us. So I still have stock, and in fact, I am a bit heavier than I was yesterday. Not a lot heavier than I was yesterday. So I did sell some for a loss into the close, just because I've got to manage my risk and manage my positions appropriately. I'm already kind of violating my rules a little bit with this trade. Yeah, we'll continue to monitor that one tomorrow. AMC worked great. I probably gave back a little bit too much P&L, but I dumped a lot of my position in front of 9 pre-market, and that's all the move I was looking for. Snap back to the 80 MA on the daily. I'm a little bit disappointed that it wasn't more through price and a little less through time, but you know, doesn't always work perfect. If I could have gotten more of a price correction over the course of the last couple of days, I think, you know, $10 or so was very reasonable, but it turned into more of a time correction. So when I saw we were gapping up almost into the 80 MA on the daily chart, I said, you know what, this was really only my target, so this was my game plan, and I'm gonna sell out a lot of my position, but I'll also keep a little bit. I'll keep some and see if I can get that move to $10 or a little bit above $10. And I didn't get it, so you know, I sold a lot up here, and it's my third best name of the day, I guess. But I had a couple solid winners. I sold a lot up here early, but then I was adding back a little bit on the way down, and I certainly gave back some P&L, and I closed off my highs in the name. So yeah, that kind of defines my day a little bit. Talks about the market a little bit. So I'm happy to turn it over to you guys and answer any questions that anybody has. Just seeing some chatter here in the VTF bet arm. There's Rex. Hey Derrick, I got a little detailed question today. I'm kind of not happy with my performance today. I took 2 trades in meta this morning. I remember the first one you called out. I really liked it, and I supported your idea. So I already know kind of what you're going to be pointing to, at least with one of them. I'm pretty sure you went long off the 955 low. I liked it. It was in conjunction. It broke new lows there. It gave a, you know, it was building out this tail. It was into the 21 EMA, but it probably most importantly, it was right in conjunction with when I think that the market should have bounced for us. So I remember you communicated that trade to the team. I really liked it. It just didn't work. But let me read your question. I took 2 trades in meta this morning. Both of them I was not able to cover my 1-to-1, so you never got your risk covered on either of them. Obviously on this trade I can see why. One was when it traded through yesterday's high, which is the inside day high. Aha, so that's your first trade, was at the open. At the open. So yesterday's high is 307.18. The opening low is like 305.92. So you've got, I don't know, $1.25 or so in risk on that, provided that you executed well and didn't really get much slippage. Opening move is to 308.60. So it looks like you might have gotten very close to your 1-to-1 on that, but maybe just didn't quite get it. But let me read actually what you say. So your first trade was at the open when it broke the inside day high. At the open, the market was extended on the small time frame, but I saw that meta was relatively strong. Seeing the volume was decent, so I went for it. I got stopped at the low at 9.55. Okay. Should I avoid getting in the stock when the market has a common gap with extension, even though the stock showed relative strength? I'm not going to say no that you should avoid it entirely. I think, and I assume this is what you did, that you probably just don't want to take it with a massive amount of risk. The market is a super important layer of probability. That's why we're constantly assessing the market. My game plan that I mentioned to everyone in the morning meeting, and this is why, by the way, I always start with the market game plan before I get into any individual stocks. Even though I might not trade the market, I might not trade the SPYs or the Qs or the IWM or any of their ETFs, I always start with the market game plan before I get into any stocks, because the market game plan dictates the stock game plan a lot of the time. Unless you're trading something that's on earnings or, in its own universe, you really need to have that market game plan. So the market game plan is in these larger common gaps to the upside or downside. We don't want to chase in that direction. We want to let the ADMA catch up. So that's why, just going over to the SPYs, this market gap in the SPYs was telling us not to be buying stuff off the open, to wait for the ADMA to catch up, and ideally to get a pivot off the ADMA. That's why I had so much conviction at the 9.55 pivot low. And I called it early, too. I called it like as this candle was forming. Like, you could have bought like 448.20. So for a lot of the trades, and I know this is where you took your second trade in meta, but for a lot of the trades that got called out at 9.55, the move was big enough to get risk covered, even though it then failed. For you, with your meta trade, with your execution, perhaps not, and you can kind of see why when you look at the 5-minute chart. But, so you're looking at the SPYs and the Qs that are gapping up really big, and that's against you. That's against your trade here on meta. Though it's not impossible for the market to, have a strong opening momentum rip to 450 and then go into correction through time or through price. We especially see that type of move when we're in an uptrending market, like in June and July. Now, when did we break out? Yeah, June and July of this year when we were trending higher. You might have the SPYs gap up and then shoot up even further before time and price correcting. So it's just one piece of information that I would say is against you, but not a reason to not take a trade if you like other things. And you saw relative strength in meta, you saw volume confirmation in meta, you saw the inside day, you saw a good looking daily chart. The daily chart's not that extended. So there were things to like with your trade, and you went for it. So I just think that when you're doing your analysis of how you want to game plan a trade, you need to weigh the fact that the market is providing this large common gap up and is giving extension and is not in your favor, with the other things that you see in your favor, and then based on that decide, do you want to be involved in it at all? And I think that if the answer is yes, I think that's okay with this trade. But if you want to be in it all, how much risk do you want to take? And the answer to that is certainly not max risk. So, you don't want to be taking max risk. You really want to focus on trying to get the 1-to-1. And it looks like with this meta, you probably barely missed it. If the market wasn't so weak and meta was so relatively strong with the open, you easily could have had this meta hold this opening low. And if meta held the opening low by just a few ticks, it barely broke the opening low, and then the market actually pivoted where I thought it would pivot, this never would have pushed you out, and you would have had really good stock. Or even if with great relative strength, this wedge could have just broken to the upside, and it never even comes close to retesting it. So I think that what you did there was fine. I think I already know your second trade, but let's take a look at what you have to say about that. Then the market also bounced back on the 15-minute equilibrium. Yep. So I re-entered the trade, and it stopped me again at 10.10. Yeah, so you're talking about the gap this is when I was calling for longs, right? The gap fill in the Qs at 9.55 as this tail formed. As the SPYs caught the ADMA on the 5-minute and formed this tail, I was 100% calling out for longs at 9.55. IWM had gotten back below 185, which I didn't like, but it wasn't the end of the world because of how much opening extension that we had. ADMA catches up to lows, inside 5 and up there. I loved the idea of looking for longs at 9:55, 10 a.m. And I was, off the open. Patience. I'm looking at the IWM running, and I'm like, oh man, maybe I missed some opportunities, but I didn't care. I really wanted the setup to come to me. And I thought that the setup came to me at 9:55, and we just got a deeper correction that pushed me out, which is kind of how I, started this afternoon meeting today, which is that this market just seems to be kind of overshooting and undershooting, where I think normally and traditionally we might create those pivot points. And, it just kind of is what it is. So I really liked your meta long, and I liked it when you communicated it in real time. And by the way, I appreciate that you communicated it in real time, because you put a good trade on my radar. You put a good trade on your teammates here in the VTF on their radar. It doesn't matter that it didn't work. I thought that was a great trade. I liked that it shook out that low by a little bit. It shook out some longs in this thing that were recognizing that relative strength off the open. There was a lot of reasons why that really could have gone there. But let me just read your question and make sure I actually covered everything, because I didn't read the entirety of what you said here. So Meta was showing relative strength all morning. I thought that if the market could ever bounce, Meta would be the one to go due to its relative strength and tight range on the daily. However, the market kept grinding lower and lower when I was in the position until I got stopped out, and then it bounced immediately in the direction I wanted. Yeah, I don't think you can. I don't like this part of your statement here. I got stopped out, and then it bounced immediately in the direction that I wanted, because that question implies that you did something wrong. You did nothing wrong. You got shaken out of a position because of what the market did, and we work in a game of probabilities. So it's going to happen sometimes. Probability dictates that all of us as traders will be in winners, will be in losers, will be in shakeouts. And the worst thing that you can do is let one instance of a trade change your entire approach. One shakeout, say, I shouldn't use stop losses anymore, as an example, and then you've got no risk management. It's just a really slippery slope. So how would you deal with situations like these, knowing that Meta was getting tight on the daily, on the uptrend? This should be the one to go if the market could ever give some help. Is there a situation you would consider building into the daily level? Yeah, instead of using an intraday setup or vice versa. I feel my game plans are okay, but when I execute with the intraday setup, oftentimes it doesn't work. Yeah, so again, I don't think you did anything wrong here. Your question on would you build in versus something bigger versus taking something on a small time frame, maybe, is really my answer to that. I do that. I definitely do that. And we talk about it in the morning meetings. You could look to build into Meta versus the inside day low, but I prefer to trade in the way that you're actually describing. Yeah, you could get shaken out. There's a higher probability of a shakeout. This Meta was never wrong based on the daily chart. It was wrong based on the 5-minute chart at a certain point, but it was never wrong based on the daily chart. So yeah, I mean, look, sometimes I'll combine it. I'll have some that I'll be building in based on the bigger picture daily chart that maybe I never already gotten stopped out of. But the better risk reward and larger sizing that enables game planning and reward maximization comes from that smaller time frame execution when you really get it right. So again, I really like particularly your Meta second trade. The first trade was okay, but I particularly like that second trade that you took, and it just didn't work because the market failed there, which is how I led my meeting about how difficult and tricky some of this stuff has been. So yeah, appreciate the question, Rex. I think you got the right idea. Let's just make it come together. From Eddie Vic, I missed out on the morning session. I thought the PPI is getting hotter. Core is in range. CPI yesterday was also hotter on energy by very little bit. Do you guys know why the market is rallying today? Is it retail sales or the job market? We're all kind of scratching our head, I think, a little bit on that. it's really hard to know what the market's actual expectations are. I mean, we know what the analyst estimates are. I I'm surprised, to be honest with you, that the market was as strong as it was today. I'm surprised that the market's been holding in as good as it's been holding in, given the IWM weakness, the dollar strength, the increase in interest rates, the very small miss on CPI, which you could easily say that wasn't that big of a deal, and the larger miss on PPI. Now, we do know that the PPI tends to move the market less than the CPI, but I'm left scratching my head on the why, for sure. So I'm in the same camp with you on it. The only thing I can point to is that the technicals are bullish. So this is why I think it's great and important to have a thesis for the market and to understand what's going on. But listen to the technicals, and we have a very simple process for how we view how the market's reacting to a news event. Is the market or that stock trading above or below where it started when the event hit? And even though we did tick down immediately and we ticked down very briefly at the open to below the starting point, we spent the entire day above. So what does that mean? When you're above the starting point, the market technicals are telling you that they like the news. There's more demand than supply based on that news. So I could be left here scratching my head and trying to figure out ways to justify how the market could in any way be enjoying the dollar strength and the interest rate increases and the PPI, coming in hot today. I am scratching my head on it a little bit, but I didn't fight it. And I do, but it's also where the concern is that I'm trying to let you guys know that I have about Options X, because I don't think it's, and this is just based on what we've seen this happen historically. Sometimes the market just kind of builds up on this negative information and continues to hold in, and it has more to do with market dynamics than anything else. And then you get through an options expiration and it unclenches that volatility to some degree, and then all of a sudden the market takes notice of everything. And I'm not saying this is going to happen. I still think it's the lower probability situation. But you watch. If we sell off tomorrow or early next week or both, you watch by Wednesday of next week if we have a big, couple day sell off, all the people on CNBC all of a sudden start talking about how the CPI was hot and the PPI was hot and the dollar is strong and interest rates are going up. I don't know what they're talking about today. I don't watch CNBC. If I'm at the office, sometimes other people have it on and I listen to it a little bit. But I if I'm working remotely, I don't ever even have it on anymore. Maybe I'll turn it on if there's going to be a really important guest, because they don't know. They just say everything after the fact. So that's certainly an event that could happen. But like I said before, you can't look at this chart of the S&P right now and tell me that this looks bearish in any way. So right now, would you rather be short than long? I would rather be long. But with an understanding of everything I just said, maybe I don't want to be aggressively long. And that's why I'm a little bit nervous right now, because looking at my overall long exposure to the market and how much buying power I have outstanding and everything else, I would describe myself, based on my history of the last couple years, as moderately aggressively long. Not massively aggressively long, but moderately aggressively long, which is fine if the market wants to do what it did today. But I'm a little bit nervous about tomorrow and early next week if all of a sudden the market decides it wants to catch up on some of these negative confirming factors that we're looking at. So I need to not add any new longs, take shorts if I see the setups come in. I liked Josh's short that he kind of took into the close. He's got some longs on also, so he's taking a trade there. I don't want to speak for him, but he's taking a trade there. But it's also helping to kind of hedge him out a little bit with the short trade while he's got some longs on. So I kind of want to look for some similar setups. At a minimum, I need to be disciplined enough to not allow myself to get into any new longs for anything more than a quick day trade tomorrow. And also, I probably should look at ways to liquidate some of the newer longs that I've put on that I don't really need the exposure on. AMC now that it fully met my target. The AMC stock I have on at this point is just pure greed. It was just meant to be a trade for me. I said it every day. It's just meant to be a trade. Just trying to snap back to the 80, man. Well, guess what? I got it this morning, and I did liquidate a majority of my position, but I also decided to be greedy and keep some and even build back into a little bit of what I sold as it pulled back. Or the Chewy position, now I'm in it. I need to properly manage it. But I probably need to use roughly today's low as a legitimate stop loss in that thing going forward, and not be overly aggressive on the upside if I'm able to get some sort of early bounce tomorrow, just because my portfolio doesn't need the additional long exposure right now. I've got plenty of long exposure on. So, yeah, appreciate the question there, Eddie. All right, looks like I got through everything on the VTF. Let me type up the YouTube real quick. See if I missed anything in there. Giving myself the thumbs up, just because only 6 of you did it, so I need the rest of you to do it. From Robert on YouTube. Yesterday you mentioned that the market already priced in CPI. How are you analyzing if the market is priced in some event in advance, or how do you do any math if something is priced in or not? So, I mean, generally it's just versus expectations, right? So the market has bigger moves on surprises of expectations. I just didn't think that, on the CPI, we came in hot by 0.1%, but only on core. It's not what you want to see, but I think that there was already a lot of fear and jitters on the uptick coming in hot. So the market may have been anticipating an even slightly worse number than we actually got, just from a positioning perspective. So the fact that we just got through the event, I think, might have been enough for us to not sell off yesterday and to actually be strong. So, the first level thinking is very simple. It's just the market is going to move based on how we beat or miss expectations. But really, second level thinking that you need to have sometimes is the market is going to move based on the expectation of the beat or miss of the estimates, if that makes sense. Meaning that if the expectation is that everybody thinks it's going to come in hot versus estimates, normally you think that means we would go down if it does. But if you recognize that everybody's already expecting that, then maybe it doesn't if it's not that bad. And that's kind of what we saw yesterday. So, hope that helps. Robert from Cyril. Do you have any tips on how to improve being patient when entering the market at the right time? I tend to jump in early, but now I at least start with a small feeler, but this is still kind of cheating. Yeah, it's something I'm still working on also for my own trading. Pat's the patience master. So, especially on the counter trend stuff, I love Pat just being in the VTF because he's my little, kind of confirming factor. When we're looking at something ripping, I'll be like, Pat, am I ready yet? Pat, should I be shorting yet? And sometimes I don't listen to him and I jump in anyway ahead of time, but he tends to be much more patient on that counter trend stuff. I have a tendency to sometimes also be a little bit too aggressive on the open with an idea that I have without getting the real technical signal yet. And that was the situation this morning, honestly, with Chewy. I jumped in too aggressively on an ad in Chewy too early, and I hurt myself because of it, and I had to liquidate someone in the close at a loss that I wouldn't have had to do if I was more patient at the open this morning. So how do you rectify that? Like with anything that comes from bad psychology, it's good game planning. If I had better game planning this morning that said, I am not going to buy my ad in Chewy until I get the signal of an RDR or whatever, then I would have been fine. But I didn't. I was kind of like massaging a continuation of a game plan from yesterday where I'm already kind of violating a rule a little bit by even keeping the position overnight. And I think that led to me to trade it poorly. And if I had a better game plan and I just followed the game plan, I wouldn't have had an issue, and I wouldn't have had that heavier buy be too early. So I'm just kind of speaking for myself there, and I hope that helps you as well. All right. Cool. So I think that wraps things up for today. So have a great night, everybody. See you all tomorrow.